An accounting method is just the rulebook for timing. When do you pick up income, and when do you deduct expenses? The IRS doesn't force one method on everyone, but your method has to clearly reflect income, and you have to use it consistently year to year. On the EA exam, they'll test timing differences more than bookkeeping details. Cash versus accrual is the classic split. Cash method is generally paid and received. You deduct when you pay, and you report income when you actually receive it. Accrual is earned and incurred. You report income when it's earned and deduct expenses when the liability is fixed and the work has happened. Hybrid methods mix pieces, but the exam usually starts with cash versus accrual. Now, the big practical gatekeeper. Who is allowed to use cash? Under TCJA, most businesses can use the cash method if they meet the gross receipts test and they're not a tax shelter. For 2024, the threshold is $30 million. On the EA exam, watch for the phrase average annual gross receipts and make sure you're using the right averaging rule. Here's how the gross receipts test works. Add gross receipts for the 3 preceding tax years and divide by 3. That's your average annual gross receipts. If the business hasn't existed for 3 years, you average the years it does have. Exam tip. They love giving you 3-year numbers and seeing if you accidentally use the current year instead of the preceding years. Method choice also shows up by entity type. Accrual is common for large corporations, and publicly traded corporations generally must use accrual. You'll also see large nonprofits pushed into accrual because grants and audited financial statements often require it. But for many small businesses under the threshold, cash is the default because it's simpler and usually accelerates deductions. What if one owner runs 2 businesses? You can use different accounting methods only if the businesses are separate and distinct. The key exam phrase is separate books and records. If you keep separate records and file separate Schedule Cs, you can often justify different methods. If everything is blended into one set of books, the IRS won't treat them as separate and distinct. Finally, prepaid expenses and the 12-month rule. Cash-basis taxpayers usually want to deduct when paid, but prepayments can get capitalized. The 12-month rule is the escape hatch. You don't have to capitalize if the benefit doesn't extend beyond the earlier of 12 months after the benefit begins or the end of the next tax year. Pay 2 years of rent in advance? That benefit is too long, so you spread the deduction over the coverage period. Marisol is a self-employed midwife with a home office. Her principal place of business is her home, but she rarely meets clients there. Instead, she travels to clients' homes to perform her services. Which statement is correct? Consider whether round-trip transportation between her home office and clients' homes is deductible, whether the home office qualifies, or whether none of the statements fit. Think about it. The correct answer is that Marisol can deduct the cost of round-trip transportation between her home office and her clients' homes. If her home office qualifies as her principal place of business, travel from that office to client locations is business transportation between work locations. A tempting wrong choice is saying the home office doesn't qualify because she doesn't meet clients there, but meeting clients isn't required if it's the principal place of business. Cedar Valley Foods Incorporation is a fiscal year C corporation using the accrual method. What is required for the company to deduct an expense? Focus on whether payment is required, whether an invoice is required, or whether the key is the accrual standards like the all events test and economic performance. Think about it. The correct answer is that Cedar Valley Foods must meet the all events test and have economic performance to deduct the expense. Under accrual accounting, payment isn't the trigger by itself, and neither is receiving a bill. A tempting wrong answer is they must receive an invoice, because invoices feel official, but accrual deductions depend on the liability being fixed and economic performance occurring.